Welcome back. Previously, we have discussed about the principle of disclosure as well as the presentation of financial statement. Let us discuss about the other aspect with regard to convergence to IFRS. Next one, convergence of Indian accounting standards with IFRS. We have been using the term convergence in numerous cases. Convergence of Indian accounting standards with IFRS means how the accounting standards of our country adapted to the international standards. So the convergence of Indian accounting standards with IFRS began with the ICAI issue of concept paper on convergence with IFRS in 2007. On the basis of that paper only, we have started deciding to take a move on adapting our standards with the international standards. And even though it was started, the idea was started in 2007, it has been postponed several times due to many reasons regarding that. So, by the term convergence is to design and maintain the national accounting standards in such a way that the financial statements prepared in accordance with the national accounting standards should be in compliance with IFRS. That is the main concept of convergence. It is actually an adapting of foreign standards along with our accounting standards, but it doesn't mean that we are adopting the international accounting standards. That point should be kept clear. Our standards or accounting standards of our country or the international accounting, Indian accounting standards never ever adopted the international standards. We are adapting to the international standards. We are maintaining our standards and at the same time trying to adapt with the international standards or in the IFRS. That is the concept of convergence. The convergence is to design and maintain national accounting standards in such a way that the financial statements prepared in accordance with national accounting standards should be in compliance with IFRS. That is the concept. For convergence purpose, the accounting standard after convergence is called Indian Accounting Standards. It is known as Ind AS. Earlier it was simply known as AS, that is Accounting Standard of India. And after converging the accounting standards with the IFRS, the new set of standards is known as Ind AS or Indian Accounting Standards. We have discussed about the same area previously in one of the slides. Don't get confused by the term IAS. IAS doesn't mean that Indian Accounting Standards. IAS means International Accounting Standard. Here in the sentence, see, Indian Accounting Standards usually written in a sentence format. You will write Indian Accounting Standards, but the abbreviation IAS doesn't mean that it is Indian Accounting Standards. It means International Accounting Standards. We have discussed this area previously. If you have any queries regarding that, go through the previous slides. So, for the convergence purpose, there are three phases of applicability, and the three phases of applicability of converged set of accounting standards in India are phase 1, phase 2 and phase 3. On the basis of these phases only, we are converging our accounting standards with the IFRS. So, what is the meaning of this phase 1, phase 2 and phase 3? Actually, these phases represent what are the type of companies that has to be included so as to follow the new set of Ind AS standards. So let us go through various phases. The companies that comes under the three phases has to comply with the Ind AS. I have mentioned that as part of convergence of our standards with IFRS, there has been three phases, and actually these phases includes the details of companies. The phases has been made on the basis of nature and peculiarity of the companies. And actually in each of these phases there are different types of companies, and such companies must go as per or must prepare the financial statements as per Ind AS. So companies comes under these three phases has to follow Ind AS. Anyway, phase 1. What are the companies that comes under phase 1? Under phase 1, companies forming part of Nifty 50 index, that means it is a benchmark of Indian stock market index that represents the weighted average of 50 of the largest Indian companies listed on the National Stock Exchange. It is one of the two main stock indices used in India, and other one is the BSE Sensex. So we will come to that part. So companies that are coming under the Nifty 50 index should follow the Ind AS. And next one, companies forming part of Sensex. That is the next main stock indices used in India. It is also known as S&P Bombay Stock Exchange or Sensitive Index or simply Sensex. It includes the list of 30 well established and financially sound companies that are listed on the Bombay Stock Exchange, and companies that comes under the Sensex also, that is within the list of 30 companies, also follow Ind AS. Companies whose securities are listed outside the country. Outside the country means there are other types of stock exchanges around the world. Such as Nasdaq, New York Stock Exchange, Shanghai Stock Exchange, London Stock Exchange, Stock Exchange of Hong Kong, Tokyo Stock Exchange, NSE, ASX, Swiss Exchange. There are many stock exchanges that are around the world, and any companies whose securities are listed outside the country also has to comply with Ind AS. Next is companies either listed or not listed. Either listed or not listed means either listed in the stock exchange. Sometimes it may not be listed, or it may be in the process of listing. Anyway, companies listed or not listed having net worth of that exceeds 1000 crore. So all these companies that comes under the phase 1 should compulsorily follow Ind AS standards. Next phase is phase 2. Phase 2 includes all those companies either listed or not listed having the net worth in excess of more than 500 crore are required to adopt Ind AS. That is with regard to phase 2. And finally, phase 3 includes the listed companies having net worth lower than 500 crores are required to adopt Ind AS. So these are the companies that has to follow the Ind AS concept, and it has been classified into three phases: phase 1, phase 2 and phase 3. So in that case, remember, in our country there will be two sets of standards. The accounting standards that has been in our country previously, and the new set of standards otherwise known as Ind AS. So how these standards has to be followed? The companies mentioned under phase 1, phase 2 and phase 3 must definitely follow Ind AS. And see, there will be two sets of accounting standards in India. One is called the Indian Accounting Standards or Ind AS, and other is the existing set. The companies that comes under these three phases has to follow Ind AS. And the existing set means the earlier one, Accounting Standards of India, would be applicable to those companies not covered in these three phases. I believe you have understand the concept. The earlier accounting standards has to be followed by all those companies who are not coming under these three phases, and the companies coming under these three phases must follow Ind AS. That is the concept. So next one, let us go to emergence of Ind AS. The Indian Accounting Standards, otherwise known as Ind AS, we have been using this term many times. I believe you all will remember the concept. Ind AS is the accounting standards adopted by the companies in India and issued under the supervision of Accounting Standards Board. In India, it is known as Accounting Standards Boards. In international level, it is known as International Accounting Standards Board. That board will issue IFRS. The Ind AS are converged standards for IFRS. We have discussed about that. Ind AS was notified by the Ministry of Corporate Affairs. Remember MCA, that means Ministry of Corporate Affairs, on 16 February 2015. Announcing the company's rule of 2015. So on the basis of that, the Ind AS was introduced. And the Ind AS are named and numbered in the same way as the corresponding IFRS standards. So there will not be any confusion regarding that. If the IFRS 1 represents presentation of financial statement, Ind AS 1 also represents presentation of financial statement. So the thing is, only some of the standards have difference when it is compared to the Ind AS and the International Financial Reporting Standards. And in almost all the standards, it is almost the same, or they are following the similar pattern. Only in some cases only there is a difference in the title as well as the standard number. The National Advisory Committee on Accounting Standards, otherwise known as NACAS, recommend these standards to the Ministry of Corporate Affairs, CMCA. And the MCA has to spell out the accounting standard applicable for companies in India. And right now there are more than 40 Ind AS standards, and we have gone through those Ind AS standards previously. And these standards are made applicable to the Indian companies from 2015-16 onwards. In that case, it was not compulsory, but from 2016 and 17 onwards, it was compulsory. It was mandatory. Next one, whether the India has adopted IFRS standard. That is a question you will face. Whether we have adopted IFRS standard. No, we haven't adopted the IFRS standard because the India has not adopted the IFRS standard. India has adopted the Indian accounting standards or Ind AS that are based on and substantially converged with the IFRS standards as issued by the IASB. So remember that. Next one, what are the objectives of Indian accounting standards or Ind AS? The main objectives of Indian accounting standards, the main purpose is uniform system of presentation. Anyway, before the introduction of Ind AS, the financial statements were prepared on the basis of accounting standards. There was the accounting standards in India prior to the Ind AS was simply known as accounting standards or AS, which were not in the line with the standards and principles applicable globally. It was just a simple set of rules. After the introduction of Ind AS only, there is a proper rule that is applicable in the preparation of financial statements. And the introduction of Ind AS helps in the preparation of financial statements of Indian companies that are globally acceptable. So, let us discuss some of the main objectives of Ind AS. First one, standardization in presentation. That is the main aspect. Ind AS brings standardization in the presentation of financial statements by removing variations in the treatment of several accounting aspects, because it brings uniformity. When there is uniformity, there will be standardization. Next one, to facilitate comparison. That is another main purpose of bringing this convergence, because we need to compare the financial statement of our country with the financial statement of any other nation. So, it facilitates comparison. Standardization in the presentation of financial statement facilitate intra-firm and inter-firm comparison. I believe you know the term intra and inter. Intra-firm comparison means comparing the financial statement of one means that company with the financial statements of any of the preceding years. For example, if I am running my business for 10 years, I will compare the financial statement of the present year with the previous 5 years, like that. That is known as intra-firm comparison. Inter-firm comparison means comparing the financial statement of my company with the financial statement of other company. All this is possible only through this following a unified standard, accounting standard. So, standardization in the presentation of financial statements facilitates intra-firm and inter-firm comparison, and by harmonizing the diverse accounting policies followed in the preparation and presentation of financial statements by different reporting enterprises, because it brings uniformity. Next one, uniformity, just the term I have mentioned now. Uniformity in presentation, that is another main objective of Ind AS. The convergence of IFRS in Ind AS makes the financial statements uniform, so that the investors can easily understand the statements, and it helps them to compare the financial position of Indian companies with other companies of the different countries. Next one, consistency. Ind AS brings consistency in the accounting practices and principles followed by the companies in India and other companies across the world. Because if they are following a uniform system, then it helps in maintaining consistency. Consistency means following a similar pattern or a method. That is known as consistency. And next one, enhance the accessibility. The convergence of IFRS with Ind AS has helped to enhance accessibility and acceptability of financial statements by global investors. Because of this unified system of presentation, the statements prepared by our companies can be easily accessed by other investors from other part of the world. Not only they can access the statement, because they can easily accept what is stated or mentioned in the statement, because we are following as per the uniform standards. So enhanced accessibility is ensured through Ind AS. So these are the main objectives of Ind AS. Next one, standard setting process in India. We have discussed this topic in few situations in the previous classes regarding how these standards are prepared and established. And the standard setting process in India is also following almost a similar pattern followed globally. Anyway, let us go through the points. The Institute of Chartered Accountants of India, otherwise known as ICAI, being the accounting standards setting body in India. That is the board that, or the body that sets accounting standards in our country. In 2006, initiated the process of moving towards the International Financial Reporting Standards, otherwise known as IFRS, issued by the International Accounting Standards Board, with a view to enhance acceptability, transparency in the financial statements communicated by the Indian companies through their financial statements to the global world. And the move towards IFRS was substantially and subsequently accepted by the government of India. That is how the move for the convergence started. The government of India, in consultation with ICAI, decided to converge and not to adopt IFRS issued by IASB. We have mentioned that point. We never ever adopted. We just converged with the IFRS standard. We didn't taken the IFRS standard. We just adopted or made necessary changes in our standards in order to comply with the international financial reporting standards. We didn't adopt it, we just adapted to it. Remember that. So the decision of convergence rather than adoption was taken after the detailed analysis of IFRS requirements and extensive discussion with various stakeholders. While formulating the IFRS conversion Ind AS, effort has been made to keep these standards as far as possible in line with the accordance or correspondence with IAS and IFRS. We didn't adopt the IFRS standard, but we adapted to it. We have taken the various aspects mentioned in the IFRS in our accounting standards. So, in order to bring uniformity. The changes has been made considering various factors such as the various terminology related changes have been made to make it consistent with the terminology used in law. For example, we have discussed about the same area. Statement of profit and loss is the term used by our Indian pattern or Indian style. And actually, in IFRS standards, the preparation of statement of profit and loss is titled as statement of comprehensive income, and instead of balance sheet they are using statement of financial position. So the thing is, we are following as per the IFRS standard, but at the same time we are following in our own style, making necessary changes in the terminology, making necessary changes in some of the points without compromising the uniformity. So while converging the accounting standards of our country with the IFRS, we have made necessary changes in various terms for our convenience for the presentation of financial statements. But all other aspects are almost similar to the IFRS standards. Apart from that, certain changes has also been made considering the economic environment of the country, because the economic situation of India is comparatively different with the economic situation of United States or United Kingdom or Africa, like that. So whenever there is a economic change of various countries, in our country, especially in our country also, while converging our standards with the international financial reporting standards, such changes has to be considered, and accordingly our standards should be converged, and the government has taken necessary steps to bring about certain changes considering the economic environment of the country, which is different as compared to the economic environment